What would you do if your savings became worthless overnight? I mean, really think about that. What if your paycheck lost half its value before you could even spend it? This isn't fiction. It's happened. In Germany, in Zimbabwe, Venezuela, and honestly, it could happen anywhere under the right conditions. So, that leads to the big question. Could hyperinflation ever happen here? Let's dig in, let's look at the history, the patterns, and the real truth behind one of the most feared economic events in the world.
All right, to really get a handle on this, we've got to have a roadmap. First, we're going to define what hyperinflation actually is. Then, we'll break down the three-ingredient recipe that every single monetary collapse follows. After that, we'll jump into some of history's most extreme examples. Then, we'll bring it all back home and ask that critical question. Could it happen here? And finally, we'll talk about the real danger, the one that you probably face every single day.
So, let's get this straight right from the start. We're not just talking about high prices. This is something completely different. This is the moment money itself just stops working.
At its core, hyperinflation is just a total, catastrophic collapse of trust. It's when the very concept of a price tag becomes a joke because it's changing by the hour, sometimes even by the minute. It's that tipping point where the paper in your wallet stops being money and just becomes, well, paper.
And what that does is it sets off this insane chain reaction, this sort of social panic. Can you imagine getting paid and having to spend every single cent before lunch? Because you know by dinner it's going to be worth half as much. Your entire life savings, everything you work for, could just vanish in a matter of weeks. It turns everyday life into this frantic, desperate race against time, where the only thing that matters is trading that worthless paper for anything real before it's too late.
So how in the world does a modern country get to this point? Well, it turns out it's not some random accident. Every single time this has happened in history, it follows the exact same terrifying three-ingredient recipe.
Okay, ingredient number one, it always starts with the government's finances breaking down. The country is basically broke. It can't raise money with taxes, and nobody is willing to lend it any more money. So to pay its bills, to pay soldiers and government workers, it turns to the one thing it can still do: fire up the printing press. It just creates money out of thin air, and every new bill it prints makes all the other ones already out there worth a little bit less.
Ingredient number two is a crisis in the real world. The country's ability to actually make things just grinds to a halt. Factories shut down, farms go empty, the whole supply chain is a mess. So now you have this toxic mix, a flood of new money chasing a handful of actual goods. More money, fewer things to buy. You can see where this is going. But the final and most important ingredient is all in our heads. It's psychological. It's the moment when the people themselves just give up on the money. They see the government printing nonstop, they see the empty shelves, and they completely lose faith that their money will be worth anything tomorrow. And that's the tipping point. They stop accepting it. They refuse to save it. When that trust is gone, the system is dead.
And look, this isn't just some theory from a textbook. This is a pattern that has played out time and time again, pushing entire societies right to the edge. Let's look at 4 of the worst cases.
Probably the most famous collapse ever takes us to Germany right after World War I. The country was on its knees, crushed by war reparations that were just impossible to pay. This was a collapse that began with debt. To try and pay those debts, the government just printed and printed and printed money. The result was pure chaos. People were getting paid twice a day and would literally run to the stores before prices doubled again. It got so bad, so absurd, that people were burning stacks of cash in their stoves just to stay warm, because the paper money was cheaper than buying firewood. The money had lost all meaning. But a war isn't the only way this happens. When a country's ability to produce things collapses, its money is usually next. In the 2000s, Zimbabwe's government seized huge amounts of productive farmland. The whole agricultural sector, which was the backbone of their economy, just crumbled. With almost no goods being made and no tax money coming in, the government fired up the printing presses. It got to the point where people needed wheelbarrows full of cash just to go buy a loaf of bread.
Political chaos is also a currency killer. When Yugoslavia was breaking apart in the 1990s, the central government basically ceased to exist. Tax revenues dried up, sanctions crushed their ability to produce anything, and the whole country just fractured. The government printed money to fund its wars and, in the process, completely wiped out the life savings and pensions of an entire generation. It forced ordinary people back to just bartering for goods to survive.
And finally, proof that even a rich nation can destroy its own money. Venezuela sits on top of the largest oil reserves on the planet. But decades of corruption and terrible economic mismanagement destroyed their ability to produce anything else. So when oil prices fell, the government had no other income, except, you guessed it, the printing press. Citizens were forced to completely abandon their own currency, fleeing the country with whatever they could carry.
So after hearing those stories, those terrifying examples of complete social collapse, everyone asks the same question, the one that really matters to all of us. Could it actually happen here? I get it. We all see the rising debt. We see the political divisions. We feel the sting of inflation at the grocery store. It's really easy to look at what happened in those other countries and feel a little bit of dread.
But let's look at the facts. If we go back to that 3-ingredient recipe, the answer is that it's extremely unlikely. Remember? Hyperinflation requires a government that can't borrow money. Well, the US and Canada has the deepest financial markets in the world. It requires a total collapse in production. Both countries have incredibly diverse and stable economies. And it requires a total loss of trust. And yeah, that trust might feel strained sometimes, but our core institutions are still working.
The situation today is just fundamentally different. The US dollar in particular is the world's reserve currency. That means other countries need it to trade with each other. The government's debt is in its own currency, so it can't default in the same way. And most importantly, there's no widespread rejection of the currency. People aren't trying to barter for groceries. That fundamental trust is not broken.
And that brings us to the most important point. Hyperinflation, that's not the real danger for most of us. The threat we actually face is slower. It's quieter. But in its own way, it's just as certain. You could call it the silent thief. This is the thing that's actually hitting your wallet every single day. Just imagine this is your life savings. $100,000, sitting safe in a bank account. Now, hyperinflation would wipe that out overnight. It would be sudden, violent, obvious. But slow, steady inflation, it does its damage over years. At just 3% inflation, which is a pretty normal rate historically, your 100 grand loses a quarter of its buying power in just 10 years. In 20 years, it's lost nearly half. Think about that. The number in your bank account hasn't changed, you haven't lost a single dollar, but you've lost nearly half of what that money can actually do for you. At the end of the day, hyperinflation doesn't happen just because numbers on a spreadsheet get too big. It happens when trust breaks. And while a total collapse is unlikely here, understanding how it happens and how people on the ground survived it helps us prepare for whatever comes next.